Space travel has become an increasingly popular ambition amongst entrepreneurs. Airlines serve as a precautionary tale for space tourism investors. The destruction of value from the airline industry stems from a few of the same fundamental factors that will inevitably affect the space tourism industry. The performance of airline operators is extremely cyclical and highly subject to macroeconomic volatility. Travel is one of the first discretionary spending items that is cut during an economic downturn. Additionally, oil prices play an important role in the stock performance of airlines. Notice how airlines finally began to outperform the S&P after the oil index peaked on August 28, 2013 at 619. Unless one has complete faith, which they shouldn't, in their ability to predict oil prices, one should be inherently wary of investing in an airline operator. The argument could be made that irrespective of cyclical factors, there are fundamentals that drive airline stock performance. However, a closer examination of airline operations suggests that those fundamentals end up being headwinds. Firstly, from a qualitative perspective, airline operators do not have significant competitive advantages. This forces operators to compete for customers based on price. Secondly, high fuel costs means that the majority of top-line growth is not translated into profits. This expense accounts for approximately 35% of the operating expenses of the top 4 airlines. Finally, capital expenditures destroy most of the cash flows that are created, driving most of these metrics negative. Using dividends as a quick and crude method of measuring value returned to shareholders, one quickly notices the lack of consistent dividend payments, again supporting to the point that value creation is not driven by fundamental factors. Despite the poor economics of airline operators, airline manufacturing has proven profitable for a couple firms. The profitability is derived primarily from the oligopolistic nature of the industry. Boeing and Airbus dominate the manufacturing business. This means competition is primarily based on the performance of their products. Additionally, both companies are subsidized by their respective governments, allowing them to diversify into other lines of business. Alternative business lines do not make a significant impact on operations for airline operators. Finally, the R&D departments of airline manufacturers actually do have the potential to create future positive cash flows due to the development of more efficient products that can then be sold. Space tourism companies would act as operators and manufacturers. Briefly note that regardless of whether or not the discussion is directed towards space tourism as a separate business entity or a tack-on division to an existing corporation such as Virgin Galactic, it is likely that space tourism will have a negative impact on value creation as well. Analysis of the space tourism industry will draw heavily upon parallels from the airline industry. The space tourism industry is extremely novel and difficult to value quantitatively, but it is similar enough to the airline industry where coherent analogies can be made. From a macroeconomic perspective, a significant driver of growth in the overall space industry has been tied to NASA outlays. As a percentage of the GDP, these outlays have been declining since the 1960s after the Kennedy administration. Absolute values are relatively flat up until 2019. These outlays have acted as subsidies for space travel companies and are subject to political negotiation, which doesn't look promising given Ted Cruz's recent appointment to the Senate Commerce Subcommittee on Science, Space, and Competitiveness. Keep in mind this is the same guy who doesn't believe in climate change. Further examination of the fundamentals of space tourism indicated the parallels between airlines are uncanny. The margins are likely to be similar to airlines due to the comparable inputs used to create both aircrafts. Arguably, spacecrafts are more complex and would actually have worse gross margins. Additionally, fuel will also likely be a large component of operating expenses for spaceflight that would occur, destroying most of any revenues that could potentially be generated. On the subject of revenues, top-line growth does not appear to be as strong as that of the airline industry. The Tower Group provides an estimate of demand over the first 10 years of the space tourism industry. The base and constrained cases are relatively flat, with a projected total revenue stream of $600 million over 10 years. And the growth case scenario appears to be unlikely and over-optimistic in its projections. Subsequently, it is highly unlikely that space tourism will realize the same top-line growth as airline. Airline ticket prices have declined over the last 2 decades, and it is reasonable to expect the same to occur with space tourism tickets for the following reasons. Firstly, space tourism customers are paying for an experience. This experience is essentially the same for all companies. A suborbital launch with anywhere between 5 to 10 minutes of microgravity experience. The lack of a competitive edge will result in price competition to gain customers. So, in conclusion, space tourism destroys value for the investor, but space travel has potential to be economically attractive. There are other aspects, such as telecommunications, satellites, government research, etc., that allow for steadier cash flows and more attractive margins. Space travel is likely to be an extremely exciting endeavor that mankind could reap many technological innovations from, but space tourism is unlikely to provide any economic value for the discerning investor.